Hey guys, it's Mike here. This video is going to explain exactly how to save and even better, make more money when it comes to the stock market or cryptocurrency just by understanding the bid and ask price.
Woohoo! I'm rich! Rich, I tells you!
Understanding this concept alone will open your eyes to how the stock market works. By the end of this video, you'll understand exactly how I use the bid and ask price to make some sweet gains. If you want to substantially increase your profits when it comes to investing or trading in the markets, stick with me till the end of the video to be one step closer towards your financial goals. And as you're watching this video, I want you to think about some questions that you might have that you don't understand and ask them below. I do respond to everybody. So let's get into it. What we need to realize about the stock market is that anytime we want to buy a share of a company, there needs to be someone on the other side willing to sell us that share. A misconception that people have is that when you buy a share of a company, you buy it at whatever price is flashing on your screen and the stock market just gives it to you. Well, that's wrong. The price that you see of a stock has nothing to do with the price that you'll be able to buy or sell it at. The current price that you see is a historical price. It's the price that someone previously just exchanged shares at. So what we need to first ask is, what is the bid and ask? The bid represents the maximum price a person is willing to pay for a stock. The ask price represents the minimum price that a seller is willing to take for the same stock or security, and it could be cryptocurrency, forex, whatever it is. And a trade or transaction only occurs after a buyer and a seller both agree on a price for that security. So let's get a little bit more of an understanding of bid and ask. And we're going to use Apple stock as an example. So generally when you get a quote for a stock, they give you all this information, and we're only going to look at the three main things for the purposes of this video. So we have a last trade price of $132.69. And if I wanted to buy or sell, this price doesn't mean anything to me. All that this tells me is that the last transaction that happened with Apple stock happened at $132.69, meaning two people somewhere in the world have agreed to exchange hands or exchange shares of Apple for that price. Now, for someone that is interested in buying or selling, you need to look at the bid and ask price. And what the bid and ask indicate here is that there's a willingness to buy or sell Apple stocks. And what the bid indicates here is that there's someone out there that's placed an order to buy at $132.72 and nobody sold it to them yet, and they're waiting for someone to sell their shares to them at that price. What the ask indicates is that someone has placed an order to sell at $132.74 and is waiting for someone to buy shares from them at that price. And now to the most important part, how do we use the bid and ask to make money? So if you want to buy shares of a company, you have two options. You can, one, buy from someone that's selling, so you would be buying at the asking price, or you can place an order and wait for someone to sell it to you at the price that you want to buy it at, and you would get put in line on the bid. And the way to do this is to place a limit order or a market order. And on your broker, you always have the option to select different types of orders. And you can select market order or limit order. And if you're comfortable with buying shares at the asking price, you can place a market order. This will fill your order at the cheapest shares available for sale at that second that you place that order. And if you'd like to put a limit on how much you're willing to pay for a share, you can place a limit order and fill out the highest price that you're willing to pay. And if your highest price that you're willing to pay happens to be lower than the asking price, you're gonna get put in line on the bid. A good way to visualize this is to imagine a lineup. People are lined up on the buying side on the bid, waiting for someone to sell it to them. And there's a lineup of people on the sell side waiting for someone to buy shares from them at that price. So there's a little bit more nuances to this that I'll explain in another video about level 2s and order book. So now moving on to if you want to sell shares of a company, you have two options. You can sell to someone that's buying at the bid price, or you can place an order and wait for someone to buy it from you, and you would also get in line on the ask side. So this is similar to when you're buying. You can use a market order to sell at the highest price someone is willing to pay for, or you can use a limit order and wait for someone to buy it from you. One of the important things to understand is that in order to get in and out of a stock, you want the bid and ask price to be near each other. And that is often known as the bid-ask spread. The tighter the spread is, the more liquid the stock is, the easier it is to get in and out. And you need to know this. If you just place a market order and you're buying at the asking price, which means it can be higher than the current price, you might get stuck in something that you didn't want to get into. So let's use a penny stock as an example. If its current trading price is 1 cent, but the asking price might be 2 cents, that's double the price that you think you might be buying at. So if you unknowingly market buy, you would have bought at 2 cents. And then if you changed your mind later and wanted to sell, and the highest bid happens to be at 0.5 cents, you would have lost 75% of the value of your trade just by making one mistake. Understanding the importance and how to use bid and ask is very, very important when it comes to doing anything on the markets, and it's even more important if you plan to do any type of trading. Another great way to improve your ability to make money on the stock market is to understand how to read stock charts, specifically candlestick charts. And I have a video at the end of this video to help you become a stock chart connoisseur. So if you found this video helpful, check out my playlist on beginner tutorials for stocks, cryptocurrency, and forex, and let's all get that bread. Good luck.